Hey everyone, in today's video, we're going to talk about getting organized and specifically getting organized for retirement. So whether your retirement is on the horizon or you've recently retired, you need to get organized if you're not already. After working directly with hundreds of retirees over the past 20 years, I can tell you that the biggest difference maker in the transition to retirement successfully was often about how organized they were. So today, I want to go over some easy to implement steps to get yourself ready for retirement. But first, let's talk about being organized in general. There are multiple studies that have found that people who are organized are more productive because it's easier to find things, which saves a lot of time and makes you more efficient. Organized people generally don't feel as overwhelmed because they feel in more control of their environment. Organized people generally make better decisions because it's easier to see the big picture when you're not distracted by clutter or disorganization. Now, I know this is not something that comes easy for everyone, and I'll gladly admit it's not something that comes easy for me either. I've struggled with this for years, and frankly, I still do, but once I got myself organized, I started to reap the benefits, and I found that I had much greater mental clarity. And let me tell you, if you're moving into retirement, you're going to have some big decisions to make, and mental clarity is critical during this phase. So here are the steps you need to take to get organized for retirement. First, you need to calculate your net worth. Your net worth is a very simple calculation of your total assets minus your total liabilities. And it needs to be updated too. And knowing this is important for three reasons. Number one, it helps you understand your current financial situation. Second, it provides a reference point for progress towards the goals that you've set. And then third, it gives any tax, legal, or financial advisors you may hire a quick snapshot of your financial situation. And don't let this calculation get too complicated because it's really just making a list and doing some simple addition and subtraction. If you're already familiar with Google Sheets or Excel, you can certainly do it there, or you can just use an old-fashioned notepad too. So first, make a list of all your assets and estimate the value of each, and then just add up the total. You want to be sure to include things like money in your bank accounts, the value of investment accounts, the fair market value of your home and any other real estate you may own, a realistic value of your cars, the cash value of life insurance policies, and anything else you may own that has value. These are your assets. Now make a list of any liabilities, things that you owe. Be sure to include your mortgages, car loans, credit card balances, student loans, personal loans, and any other debts. Then just add the estimated value of all of these items up, and you have your liabilities. Then you simply need to subtract the amount of your liabilities from your assets to find your total net worth. And you need to keep this list updated at least every year, but really whenever you have a large buy or sell transaction or something changes materially that would impact your net worth statement. And then for the second step of getting organized, you need to inventory your insurance coverage. The right insurance can offer protection for you and your family during your working years and throughout retirement, but you need to review this occasionally, and the easiest way to do that is to always know exactly what insurance you have. So make a list of your insurance policies. Write down the company name, the policy number, and the contact information for the company and maybe even the agent. Once you've listed everything, review your current coverage and how much it costs, and see if it still aligns with your current situation and your longer-term goals. Do you still need as much life insurance if you're moving into retirement? Do you still need that disability policy? What about long-term care insurance? Have you gotten to the point where you've got enough savings now where it may be more efficient to simply self-insure? There's a lot to consider here, so just make a note of the things that you want to investigate more. And then in the third step of getting organized for retirement, you need to streamline your accounts. Fewer accounts means there's less to manage, and this means that you can focus on more important things. Looking at your list of assets in the net worth statement, see what you can do to simplify. If you have several smaller retirement accounts, would it make sense to roll them into a single account? Do you have too many bank accounts? What about credit cards? You'll increase the chances that you can keep track of things by reducing the number of different accounts and the number of different account statements that's either showing up in your mailbox or email. And just know that the process for consolidating is going to be different depending on the type of account. So just be sure to take the time to ensure you're moving things the right way to minimize potential tax problems. So, for example, if you have 4 IRAs and you want to consolidate them, just be sure you're consolidating them down to one IRA account. Step 4 of getting organized is to automate. We're living in a great age where technology can make your financial life much easier, and financial automation is one of the benefits that can put things on autopilot and let you get back to enjoying life and your retirement and not wondering if you paid your last water bill. That's just mental clutter, and that's not necessary. Instead, set up your bills, your deposits, and your transfers automatically. The next step in getting organized is to verify your Social Security earnings history. This is something you need to do every year. If your Social Security earnings have been recorded incorrectly, it can make a big difference in your benefit amount, and mistakes there are fairly common too. There's over $1 trillion in wages floating around in the earnings suspense file, which is really just a holding basket for reported earnings that can't be accurately matched up to a Social Security number. And unless you're vigilant about monitoring your earnings record, you could have earnings gaps that could have a substantial impact on your Social Security benefit calculation and impact the benefit that maybe your spouse or children would receive. Now, just knowing that your Social Security benefit is calculated using the highest 35 years of earnings, you can understand how missing wages would probably lower that benefit amount. 1 year of missing earnings can make a difference of $100 per month or more in your benefit amount. And over your lifetime, that could be nearly $30,000 in missed benefits from just 1 year of missing earnings. And if there's a mistake, just know the burden is yours to prove it. You're going to have to locate documents that'll prove the error, such as tax forms, W-2 forms, or pay stubs. And if you can't find these, the Social Security Administration says to write down the name and address of your employer and the dates you worked there, how much you earned, and the name and Social Security number you were using while you were employed. And they'll use this information to start investigating the problem. Now, to verify your earnings record, just log into your My SSA account. They don't show your full earnings history on the statement now, but there is a report about halfway down the page that will show you a year-by-year detail. And the last step, but probably the most important, is to determine a retirement budget. You can't be financially prepared for retirement if you don't know what you'll need. When I meet with a new client, I start with a little small talk and then gather some information. About halfway through my questions, I ask, how much after-tax income would you like if you retired today? Fairly often, the answer is, Devin, I'm not really sure. Now look, if you're getting ready for retirement, this is one of the most important things to know. A good financial planner can help you work through this number, but remember, you need to be the one that's in charge of your future. This is your retirement. No one's going to feel the pain of mistakes like you will. So if you're not sure how much income you want to receive in retirement, you need to figure it out. Creating a retirement budget is a good way to estimate how much money you're going to need to be spending on a monthly basis. And to get there, first, you just need to figure out what you're currently spending money on. You may already track this, or you may have to do some researching by looking at last year's bank statements, some credit card bills, tax returns. Just be sure to include non-monthly expenses that you have, that we all have, like car registration, Christmas gift, property taxes. I just got one of those bills in the mail today. Homeowners association dues, club memberships, and there's quite a list of things that occur on an annual basis. Second, you want to account for changing healthcare costs. If your employer is contributing to your premiums now, you may have to pay a larger share after you retire. And as you know, unsubsidized health insurance can be very expensive. So you may want to start shopping now for plans so that you can add an estimate of that monthly expense into your budget. And then third, think about your lifestyle and how your spending needs are likely going to change once you retire. In most cases, the living expenses go down, but it could go the other way when you find that you have more time for an expensive hobby like flying airplanes or something. Just put some thought into this number and make it realistic. When you visit with someone to create a written retirement income plan, one of the first things they'll need to know is how much income do you need in retirement? That's the cornerstone of every retirement income plan. Now, getting organized can absolutely be a front-loaded project, but listen, it is well worth the effort. Just don't be under the impression that this is a one-time event where you get organized and then you can walk away. Most of the work will be up front, but getting and then staying organized is definitely a journey. As life evolves, so does your organization, and you'll need to continue to devote some time to this for it to be effective. But going through these steps now will get you in a much better position for retirement. And then once you've put all this together, you're now organized for the next step, and that's getting a written retirement income plan. This is what I often say is like planning for a long trip. You know, with technology today, the first thing that any of us do before we take a long trip now is we look at the route on Google or Apple Maps that stretches that blue line from where you are to where you're going. Based on that, you can tell how long it's going to take, if you need to plan to book a hotel, where you need to stop for meals, and even look at alternate routes. You know there's going to be a lot of other little decisions that you'll have to make along the way, but you can plan a lot of the big things in advance, and that's exactly what a written retirement income plan should provide. This document should tell you year by year where your income is coming from, how much it should cost you in taxes, and what your final balance is. With a properly drafted plan, you shouldn't have any doubts about the sequence of distributions or the dates you need to file for Social Security. And if you're getting ready to retire and you don't have a plan like this, you should. And if you want your own plan to make sure that your money will last, it'll be tax efficient and tailored to your individual spending goals, you need to get in touch with me and my team. We'd love to help you with a plan that simplifies these decisions and gives you the confidence to move into this next phase of your life. If you want to get started, here's what you need to know. Our strategy does work best for those who have $500,000 or more in retirement assets because our approach to planning often requires larger balances to maintain flexible distribution sequences. If you have less than that, there are some fantastic financial advisors out there who can still help you. Now, if you want more information about engaging my firm, I've linked a page below where you can read more. If you like what you see, there's a link on that page where you can schedule a consultation with me and my team. This is going to be a phone call where we find out more about your needs. I actually personally conduct a fair number of these calls myself. And based on that discussion, we may or may not recommend one of our plans because not everyone needs our services, and we only want to use our time and energy on the cases where we can add value. So if you look in the description, you'll see that link, and we'll pin it in the first comment as well. Thank you for watching.